Welcome back to Primary Source China Investment. Peng.guo and I are here with show T4, and today we're talking about China's currency and the global ambitions. So we've had more than a decade of this renminbi internationalization, or Chinese yuan, CNY, RMB, the yuan. There's a lot of different names, so we're going to use them interchangeably throughout. But we can now evaluate the relative success or failure over this last decade or even decade and a half. The first big step towards internationalization came in 2008 with the start of trade settlement between Hong Kong, Macau, and some Asian countries. Then came the Shanghai Free Trade Zone, swap lines, RMB centers. I was and am still a big believer that the renminbi should be a much more popular currency for a variety of reasons that we're going to get into, but there's still plenty of things holding it back. So at the outset, Peng.guo, when I say renminbi internationalization, what does that mean? When you hear that, what does that mean to you?
I think it really means in the outside of China, they can accept the RMB for trade. I think because China is a big manufacturing country, so right now, not too many things really in the financial area. The first goal is really try to while you exchange the goods, they hopefully can use the renminbi. That means they can reduce the negative impact of the dollar as well as be more safe for and more convenient for them.
That's a great point. So I was looking at old presentations of mine, and here's a slide from one exactly 10 years ago. I was pounding the table that China had already, this is 10 years ago, China was already the first or second leading trading partner with 78 countries. It was already the leading market for everything from iron, coal, copper, to autos, cell phones, and computers. So yeah, the case for the renminbi was strong. Again, this is a decade ago, China was already the global trader and the largest consumer of a lot of these commodities. There's also a second item, which was currency appreciation story. If we, remember back to the Wayback Machine, renminbi was pegged to the dollar at about 828 all the way up until 2005. Once the renminbi was allowed to float within a range, there was a lot of constraints around it at that time, the renminbi appreciated rather diligently, about 4% a year until January 2014 when it hit 605. It hasn't been back to that level since, and it currently sits at 687 to the dollar. A decade ago, the consensus view that renminbi was going to 5. So it hasn't done that. So renminbi appreciation has no longer been the story. It's been a little bit of two-way appreciation and depreciation. So let's cut to the chase, right, Peng.guo? Is the renminbi more popular? We're hearing it every day. More and more countries trade, Belt and Road, infrastructure deals, oil settlement. So we also hear some conspiracy theories that there's a new world order out there trying to displace the US dollar. So let's compare. 10 years ago, February 2013, CNY, RMB, the Chinese currency, represented 60 basis points of global trade. February 2023, it represents 2.19% of global trade, which on a relative basis is huge. But let's look at the dollar in that time frame. US dollar went from 33.89% of global trade to 41.1, a much more substantial move. So I would argue that yes, CNY is getting more popular, but the reality is dollar is getting much more popular. What's your thoughts, Peng.guo?
I think at this moment, people really try to use the renminbi. It really try to avoid the dollar negative impact. So because the dollar used to be a popular currency, and right now it's get many negative impact for the entire world, which is very clear people about that. So people just don't want to accept that, and then they try to find an alternative currency. RMB is obviously the number one choice. But I think China done a lot of the improvement for the settlement system because it's settled with the different countries is really the basic step. Many infrastructure work China already in, I think it's already on the progress. So after those done, and the people would be the much more easy to use the renminbi. Right
Yeah.
now, you can see just trade partners that they use the renminbi just reduce the currency risk. Obviously, everyone knows the currency risk is huge. And also in China, it's like a bigger size, but the profit margin is low, like the 10%, even lower for many products. So if like the currency risk add the like the 5% or 10%, that's easily to make them lose the money.
Yeah.
And that's why the China keep the renminbi exchange rate relatively stable for many years. But you cannot manually to do it like that. It's more like sooner or later it will be market driven. So in our financial industry, you will see the renminbi asset management or product or financial product service is not keep up with the growth of the renminbi internationalization. So that will trigger many opportunities for the financial institute to give the related service, renminbi related service. Maybe just most of the time they copy the dollar related service and change it to the renminbi, but it's not just the simple, but it's like a new process, new product. So they have to work on that way. But it also gives a lot of opportunity to grow.
The story makes sense, but the data doesn't play it out, peng.guo. And something you brought up early, I think, is the primary reason. There are no real financial instruments to hold your renminbi. So that's why holding renminbi as a reserve currency is very slow on the uptake. And we can look at some official data. By the second quarter of 2022, Chinese renminbi is about 2.49% of global reserves. That's up from 1.08% when the IMF first included it in its drawing rights basket in 2016. But that's a very small amount. You can see the chart here. US dollar and euro is more than 70%. And Chinese renminbi is less than all other currencies combined, so, sort of on the level as the Canadian dollar. So that's a pretty small amount because it's very difficult to move in and out, to invest. You have these 80 central banks that have included renminbi in their foreign reserves, but they're not holding a lot of renminbi because it's hard to get a return. That's one of the, I think, biggest hurdles that the renminbi faces in terms of more and more acceptance. I mean, it makes sense if, China is buying oil from Russia to do it in renminbi. Of course, it makes sense for China, but does it make sense for Russia? And we'll get into that in a second. But once you buy something from China in renminbi, you're holding renminbi and your investment options are limited.
Yeah, I think right now is Hong Kong is really the major offshore market.
Still, yeah.
If you want to do the investment, probably the Hong Kong or right now the Singapore is get a better place. But you cannot find a place in London or in their own capital city to invest in renminbi related product or get the return. That's what I mean. The financial related service really lag to the renminbi growth. But right now, you just like the trade partner. So you export the product to the China, you get the renminbi. Yeah, but next question will pop up. How to use this renminbi? And
what can I do with it? Yeah, I have this renminbi. That's great. What can I do with
they
it?
just use the renminbi to buy back or what they want. That's quite a straightforward thing.
Yeah, the other thing I was thinking about was the past 10 years. I think we can call them, the salad days for China. China had amazing growth, huge expansion, investing abroad, becoming trading partners with the world. If I forward to the next 10 years, is the next 10 years as bullish for China? And what about the prospects for renminbi? I'm not so sure that the next 10 years will look as good as the previous 10 years. So we'll have to watch that. But just based on the data, the headlines are very, very urgent that the U.S. dollar is being replaced. The numbers don't bear that out. The U.S. dollar is actually becoming more popular globally. Finally, this note on Russia, and I read this and I wanted to just leave it here because a lot of the politicians mistakenly claim that the internationalization of the renminbi foreshadows the dollar's collapse. In fact, higher renminbi internationalization means that the Chinese government needs more dollar reserves. China needs the US currency to support the renminbi stability in the offshore market. Remember that peg, like you talked about, it's pegged to a basket, but the US dollar looms heavily. You can also see that in the bounce back in China's US dollar reserves, precisely as Russia was looking to hold more renminbi. So China's slow slog to something of a reserve currency doesn't weaken the dollar. Rather, the two currencies complement each other. So I just wanted to let people know that it's a little bit of in the weeds kind of discussion about currency and trade, but they're all interrelated. So with that, we're going to leave it with show T4. Thanks for tuning in. We'll see you next week.
Thank you.